Hello, everybody. So today was an incredible day. Today was absolutely stunning. It was bonkers, and not necessarily in the level of a price move of MicroStrategy, but it's more a day about Bitcoin. Today was a day where Bitcoin showed a strength really second to none. I am so happy about the power of its asset. Bitcoin is winning. Price discovery is here. We have entered an area where we don't know where we're headed. We're exploring, but we're almost at 120K. This is pretty nuts. Bitcoin has no top as long as Fiat has no bottom. Because Fiat has no bottom. For Bitcoin to have a top, Fiat needs to have a bottom. And the macro is becoming clear as day. Money printer go burr. The thesis that we had in 2021 was always the thesis. We just had Powell bluff us for 3 years. It's going to come back in a major way because there is no way out. And in my view, this is what Bitcoin is reacting to. Bitcoin is reacting to this, and MicroStrategy, by definition, because it's built on top of Bitcoin, it is the first company to be built on top of Bitcoin, it is reacting as well. And over the long run, I believe MicroStrategy is going to react even more than Bitcoin. I think Bitcoin's reacting to the one big beautiful bill and to the idea that I've seen spread more and more over the past few days, which is there is no way out of this debt. There is no way out of this national debt. The bill adds maybe 3 trillion. And of course, we're at 37 trillion of debt. And so that means that at some point, who's going to have to buy that debt? Well, maybe stable coins are going to buy the debt, but more likely it's going to be Fed QE operations or the Fed stealth QE undercover operations. That's where the money is going to come from. The people have no desire to address the deficit and save the fiat. And I guess that's fair because that's the voters who elected people who have no desire to address the deficit. That's democracy. And democracy is just creating a cycle of endless death of currencies. And this is what we're seeing. And this is what we've seen for the past 500 years. Since the invention of double entry accounting by the Medici, that was really the end of the gold standard, was that double entry accounting where we could create paper gold. Right, that's when it all started to go south, and if you read the history, of course, of Bitcoin, that's where I trace it back, right? Well, that's where I think most people agree and trace it back to that level, the double entry accounting, which is the idea that money is not real; they just print it. It's just a promise. It's fiat. It's trust. That's what the money is all about. It's not. It hasn't been a commodity for 500 years. So. Why did this bill pass? And why does Bitcoin have no top because fiat has no bottom? Well, fiat needs to have a bottom for Bitcoin to have a top. But it's never time for the bottom. It's never time to stop the bottom. You will never find a generation who willingly decides to starve themselves for 30 years in order to save the currency, which is what we should have done, right? To save the currency. But that's too late to save the currency. Why? Because look, the big beautiful bill, servers want no tax on tip. Families, retirees, they want the high standard deduction. Folks in high states, folks in a lot of left-leaning states, they want the nice deduction, the salty deduction. And then every single community, every single interest group wants their own benefits and incentives and tax cuts. And of course, to me, the poster child of the silliness of the spending in the bill is the whaling ships, the whalers, the whale hunters and the whale killers who get $50,000 deduction up from $10,000 for when they go whale hunting. Like we're literally killing the currency for whale hunting. Like, this is so insane in my view. But anyways, there is no bottom to fiat, and so the wisdom of the crowd tells me we're going to be okay. The wisdom of the crowd which is the nature of democracy, people voting for more spending, more and more spending, more and more benefits, always more given by the state to the people, sacrifice the currency to give to the people. This bill passed easily. A lot of people were saying that bill wasn't going to pass. It passed easily. Well, that's the wisdom of a crowd telling me we're going to be okay because we're going to move to a Bitcoin standard. And I think that is becoming the thesis in macro. This thesis is becoming so clear. This is a video from nearly 3 years ago where I already had that thesis, which is the idea. That's why I named the channel Beat the Denominator. The idea is that we are going to be diluted, right? And when you hear a lot of people talk about this, they tell you real money growth, real money stock growth is 8%. And of course, my argument is that it's way more than that because most of the estimates of money growth, if you look at M2, any estimate of M2 ignores euro dollars, like dollars held in the financial system abroad, dollars held in the banking system outside of the United States is never counted, and it's much bigger, right? 65 trillion in US debt by non-US bank and shadow banks. And of course, that money printed abroad in banks that are operating in any other country than the US, that money makes its way back to the US through trade. So really, in my view, the monetary inflation rate is closer to 15%. I stand by that number. That's my number. My number is 15%. That's what I think it is. Some people say 10, some people say 7, some people say 14. I say 15, just to be on the safe side. And this is becoming a consensus trade. I want to talk about two macro podcasts. I don't know if you listen to macro podcasts. Sometimes they get a little boring. But these two I recommend highly. You can see I listened to the whole thing. That's what I do in the evening for fun. Anyways, I think it's becoming pretty clear. And Raoul Pal, as far as macro, is one of the best out there. And it's pretty clear that a lot of macro investors are moving towards just one trade. And there is just one trade, and that is the deflation of fiat. That's the trade. That's the game in town. And the game in town is hard assets. And what's the hardest asset of them all? Well, it's Bitcoin. And so if Bitcoin is the only game it stands, or hard assets are the only game in town, the question is, what's the risk-free rate? Well, the risk-free rate is likely the growth rate of Bitcoin. And of course, Saylor estimates the growth rate of Bitcoin is going to be 29% ARR over the next 21 years, based on the Bitcoin 24 model. He predicted 29%. He updated at BTC Prague. At BTC Prague, he had like 30 or 31%. He updated it just a little bit. And 21% in the long run. Anyways, Bitcoin is likely to grow at more than 20%. Is essentially, that seems to be the consensus. And, you could argue over hard assets matter. But if you look at gold has only kept up over the past 70 or 80 years. It's only kept up. It hasn't really made you money. And the big question, of course, is real estate. Look at real estate. What's going to happen to real estate once Bitcoin gets in the way? Because you have a lot of real estate that is held for investment purposes. Actually, real estate is the investment of the middle class. What if a middle class, who's, by the way, is getting younger and younger as new generations come in. The middle class is always getting younger. What's going to be the preferred asset of the middle class? Well, I would venture out and say that the preferred asset of Gen Z and Gen Alpha is not going to be real estate. Their preferred asset is going to be a digital asset, perhaps Bitcoin, right? And so that's the big thesis. And so to beat Bitcoin, how do you beat Bitcoin? How do you beat the return on Bitcoin? Well, that's the goal of this channel. This channel, I'm trying to beat the denominator, but more and more, I should try to aim to beat the return of Bitcoin. How do you beat the return of Bitcoin? Well, to beat the return of Bitcoin, you need something built on Bitcoin. You need a company built on this new money that is Bitcoin. This new money that doesn't debase. You need to look at companies that don't debase, at companies that are not impacted by the endless government spending towards XYZ groups who voted XYZ senators from Alaska, right? You have to have an asset that's entirely neutral from all of these shenanigans that really take all of the currencies of the world towards zero. And so that's one way, and perhaps that's the easier way to do it. And the harder way to do it is something I try to do on this channel a lot, which is to look at hyper growth stocks that are still built on fiat. So you buy a fiat derivative, but you hope that it grows so much faster than debasement. You want to buy a fiat derivative that's going to grow at more than 15% a year. And so when you do that math, and if you want your fiat derivative to beat Bitcoin, it has to grow at 30% a year, right? That's the only way. Price to sales on an innovative stock, hyper growth stock, price to sales remains the same over the long run, but your sales growth is over 30% and the price to sales remains the same. Well, then all of a sudden your sales growth matches the return of the asset, assuming no multiple expansion or compression. So that's another way to do it, but it's very hard to figure out how fast a company is going to grow. But that's the other type of stock I cover on the channel. That's why I cover biotech stocks, right? That's why I cover, beauty stocks the other day. All of these random stocks, I cover them because I think the growth rate is compelling and they have a shot, right? HIMS has a shot. HIMS is disrupting an industry. HIMS has a shot at growing double the Bitcoin ARR, right? The top line growth, the sales growth of HIMS is growing at more than double the 21% Bitcoin ARR, or 4 times the monetary debasement. But you find these special stocks, you only find them in exponential stuff, AI stuff, or businesses that have a very, very high velocity. Businesses where you see a lot of transactions, a lot of very, very minor transactions who add up really, really quickly, right? You're going to have a hard time finding that in, a maker of some industrial product. You don't have a lot of velocity on that. So if you're building a nuclear plant and that's your business, well, no luck, it takes 15 years. So the money turns around so slowly, you're never going to catch up. Or at least that is my take. And so back to Bitcoin. Let's talk about Bitcoin. The high priest of Bitcoin, Max Keiser, what did he say the other day? He said Saylor might trigger another Bitcoin halving. Why would he do that? Why would Saylor do that? Because he's taking off of the market, is taking off the supply consistently that the miners mine. Now you have to look at miners, the stock to flow model, right? You have to look at miners only issuing 450 coins each day, and out of these 450 coins, Saylor maybe grabs 200 or 300 of them. So that's what he means by that, right? He might all alone be triggering another halving because the flow of new Bitcoin coming in is just gobbled up by MicroStrategy and gobbled up by all of the MicroStrategy copycats, which we shouldn't call them copycats, quite frankly. We should just call them logic. I believe eventually most companies, as we transition to a new currency called Bitcoin, most companies are going to have to be built on Bitcoin and not built on fiat. They will have to be built on Bitcoin. And so that's why I like a stock like Cooler, for example, which is an actual company with an actual plan to, have success in space, selling space batteries, etc. Cool stuff. And they have their plan, but they also invest their cash in Bitcoin. And more and more companies come that way, right? More and more companies have both an operating business and a stacking strategy, which really shouldn't be called a stacking strategy. It should just be logical. You save for the future. You save for a rainy day. I believe buying Bitcoin, I believe that's going to replace buybacks at some point. Because buybacks, if you study buybacks, you're just burning money. That's all you're doing when you buy back your stock. You burn money. It's good for monetary stock reduction. You reduce the money stock once you do a buyback. That's pretty good. But it's otherwise it's not the best. Anyways, so I believe Bitcoin is going to replace a lot of the buybacks that occur, especially as there is still that 1% tax on buyback, and tax that they may increase at some point. Anyways, let's talk about MicroStrategy now. So MicroStrategy, of course, is the story of corporate finance of this decade. It is the corporate finance story of this decade, period. If you look at what they've done so far, year to date, 6 months ended, right? The quarter ended. We're waiting for a conference call. Q2 ended. Quarter ended. So 6 months in, the Bitcoin yield strategy, right? So you dilute to accrete, right? You sell $1 for $1.80. That strategy has yielded $10.3 billion year to date in 6 months. And then of course, the fair value appreciation. They never marked it up. They have to mark it up. And it looks like they're going to have to mark it up again next quarter because we're at 118K now. We marked it up at something like 107. So next quarter, we're going again and marking it up again. Well, that's 14 billion markup. Granted, this is not necessarily going to come back at this level unless we have a huge bull run in Bitcoin. But, we could still see a markup of a few billion each quarter going forward. So that's the power. That's the big power of this strategy. And so look at the economic value created in 6 months. 10.3 billion. That's the treasury operations. Selling MSTR, common. Selling STRD. Selling STRK. Selling STRF. People often struggle to understand what the product of MicroStrategy is. The product of MicroStrategy is financial instruments. They sell financial instruments to a market starved for volatility, in the case of MSTR, and a market starved for yield, in the case of STRD, STRK, and STRF. That's the product. So the sale of product operations, right, the sale of these debt instruments, and equity, that yielded 10.3 billion. You add the 14 billion of markup, you're looking at economic value created, and quote unquote, of course, quote unquote, because, that's theoretical. But quote unquote, the economic value created is 24 billion. The market cap is 120 billion, which means that the ratio, the proverbial PE ratio, which is not what it is, but the price to theoretical economic value, let's call it like that, price to theoretical economic value ratio for a 6-month period is a 4.93 right now. But we don't calculate this over a 6-month period, right? We calculate this over a 12-month period. So over a 12-month period, you're actually looking at a 2.46x. That's the multiple to economic value created for MSTR. That's absolutely nuts, if you ask me. We've never seen a beast like this in the financial markets. Keep in mind, Saylor's peer group is big tech. He was one of the companies in the 2000s, and he's got a beef, with what happened and how MicroStrategy did not become that big tech firm. We saw that at Strategy World at the conference he organized. He wants back in that club. He wants back in that top 10 entrepreneurs club, and this is earning him back this spot. This is absolutely stunning, if you ask me. Once again. So can MicroStrategy, going back to my title, can MicroStrategy be worth $1 trillion one day? Well, first of all, do you remember when NVIDIA was just worth a few billion and now it's $4 trillion? I do. So, and of course, MicroStrategy and NVIDIA have had very similar returns. NVIDIA is slightly higher, but not over a 10-year period, not over a short-term period. Anyways, it's in the same club as far as returns go. And I will tell you, the hardest has been done already for MicroStrategy, in my view. And the hardest was what we saw unfold the past 5 years. In the past 5 years, the stock is up 36 times. So 3,569%. So almost 36 times. 36 times. Is what the stock, well, actually more than that, almost 37 times. 37 times. That's insane. That's insane, okay? And what's the increase in market cap? Well, the increase in market cap was 120x. It moved from a market cap of about $1 billion, sometimes as low as 800 million, to a market cap of 120 billion. And you may say, oh, why didn't the stock do 120x? Well, you know why, because there was dilution along the way, because that's, how did you achieve such returns that I presented? How do you achieve these returns? Well, you achieve these returns by using the ATM and much of the Bitcoin acquired on the balance sheet. Most of these gains have been due to the common ATM. It's thanks to the common ATM that we are now in this position with this bag. It's thanks to the common ATM. So the dilution has been extremely accretive, right? Extremely accretive. This 120x in market cap yielded 36x in stock price, and you welcome new people along the way every time when they buy your newly issued shares. So that's just beautiful. And so concluding the question, well, can MSTR be worth $1 trillion one day? My answer to that is a big yes, a big resounding yes, because we only have a 8x to go. We're at 123 billion right now as I speak. We only have we only have 8 or 9x to go, and so that means with an ATM of 1.88, you sell $1 for 88. So let's assume he sells $10 billion. That's 8.8 billion of BTC dollar gain that you add. So that right there is gonna help grow much faster. And of course, the big question as to how big can strategy get is the draining of the bond market. He has started draining the bond market with Strike, STRF, and STRD. And these new instruments are going to be ATM'd weekly, except on the week for the quiet period. But aside from 4 weeks out of the year, we should expect these ATMs to be used weekly, depending on market condition. And not only do you borrow the money that you then put into Bitcoin, and then you generate a BTC gain in the stand of price appreciation, that's going to turn into a fair value accounting gap earnings that you're going to be able to report. That's one aspect. But another aspect is you're issuing at par, right? So you're issuing at 100. These free preferred are issued at 100. So if he's issuing at 100 and it's turning at 122, that's like a 1.22. Your price to par is 1.22. So you collect the 0.22 on top of the money that you're borrowing. So this is extremely compelling for strategy to issue these preferred, and this is very, very compelling also for the buyer, because they are getting that a yield that is backed by so much permanent capital, because strategy so far has been a story of permanent capital, unencumbered capital, on which these are built, and on which the preferreds have a claim. The preferreds come first in the claim structure after the common. So what Saylor has engineered right there is just stunning, and I think we're gonna look back in a few years and we won't believe how much money from the bond market flows straight into Bitcoin. And as you saw, the tweet this morning, you never sell your Bitcoin, Michael Saylor tweeted. Hell is filled by the sorrow of those who sold Bitcoin. He tweeted something like that this morning. The guy is not going to sell. He's not going to sell. So that's why it's a siphon. It's a black hole. It's a one-way street. And that's why I'm so bullish on MicroStrategy. I am not selling MicroStrategy. I love the new players. The new players are great. But the new players are not a debt story. They're not a bond draining story just yet. MSTR has entered the new phase of that journey. Are you so sure that MSTR will underperform a lot of these newbie companies that came onto the scene? Are you so sure? And that's what I'll end it on. On this day of celebration, this is the day of celebration. Let us enjoy the mascots that were introduced at Strategy World. Strategy introduced 2 mascots. This is a badger. Nice mascot. Why not? Meme friendly company. This was not investment advice, not financial advice. I'm hoping you were entertained. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.